G'day Internet, Max right here, and I actually just finished recording an interview with Juan Villaverde, one of our favorite guests here on the show. And then I signed off, and then he and I just had a chat, just completely just talking about stuff that we're passionate about, completely off the topic. We thought the camera was off, but in fact, it was recording the whole time. And it turned out to be such great content, I could not publish it. So this is actually so I'm going to throw it right now to the interview with Juan. Take care.
This kind of confirms the view, in my view. It's not going to go anywhere.
You just think it's going to trick sideways for a while, but you think we'll get some more buying opportunities at 18,000 again?
Oh yeah, I pretty much said that. Yeah. Pretty much, because the thing is, I don't want to, because when you ask me to explain the model, I can get really into the weeds. So the model kind of suggests that the low is in November, December, and so I've seen this before. The fact that you think you have a date doesn't mean that prices cannot get there first. They can get there fast. So for example, you can get to the low in June, but then just go sideways into November, make a double bottom to that or triple bottom, and then rocket higher. Right. So that's what I see happening. It's just going to retest. And the reason it's going to retest is I don't think June is too early to be the low. So it needs to be retested. So I've always said November. Now, if you look at the price action, I mean, sure, if we don't go much above 22, 23, the cycle is going to turn down at some point. This is what I love about cycles analysis. Like the cycle will turn down. So it's been up since September 21. We have maybe another month of up, then it's going to turn down. So it's going to go lower. Once it goes lower, how much lower does it go? Well, there's no volatility. The market is flushed. Who's going to sell it? I don't think anyone's going to sell it. I think we can almost rule out a stock market crash, even though it looks like 2008. I think we could almost rule it out because if it crashes, it's just a carbon copy of 2008. And I have a hard time seeing that because history rhymes. It doesn't beat, not move for move, not like that. And everybody can see it. Nobody could see 2008. Everybody can see 2022. So as a contrarian, I'm like, nah, it's not going to crash. Why? Because everybody's expecting it to crash. I mean, the other day, the stock market was down big. The VIX didn't move. Stock market was down like 2%. The VIX didn't move at all. I've never seen that. And I've seen it plenty of times in 2022. It tells you that a lot of people are fearful and they're hedging. So it doesn't crash because they're hedged. They don't have to sell. They have puts.
What the risk they're weighing up against each other, they're weighing up inflation risk versus stock market risk.
Totally. I think they're bidding up stocks. I mean, if and this is something that I've not ever been able to like put into words. It's like a scattered thought. It's like if you really think inflation is coming, you should buy stocks.
Yeah.
Because they're inflation hedges. Look at Argentina's stock market. It was great. I mean, Venezuela, I don't know if they still have a stock market, but when they did, it was doing great, doing the hyperinflation. So inflation is good for stocks. It's only because people think the Fed is so hawkish, they're going to crush the economy that stocks are risk assets are down. It's not the inflation. They're not saying the Fed is going to fail. I think they're saying the opposite. They're saying we think the Fed will succeed and that they're also going to crash everything. That's why we want to sell. So they worry about the central bank. And what if the central bank doesn't have that power? Because inflation just doesn't go away. At what point does the narrative shift and people say, okay, maybe I should buy stocks because it's not crashing and inflation is not going away?
That's a really good point because I don't think inflation is going away. I think and so at some point the bigger fear is inflation rather than poverty induced falling markets.
Exactly. Right now the logic goes, okay, we have inflation, therefore the Fed is going to fight it, therefore the economy is going to crash. What if that doesn't happen? What if people say no, inflation is here to stay and it doesn't matter what the Fed does? What do people do then? I think they buy stuff just like they did in where I'm from. Like prices go up when there's inflation, go down. Financial assets go up too.
So that but that changes things because at some point, one of those two things have to win, and it's like okay, then we go back to the same stuff. It's like, well, yeah, we know they print.
Short term, yeah, anything can happen. Long term, there's too much debt, and no government that can print its own money has ever gone into default willingly. So they're not going to default. So if you rule out default, what more options do we have? They have austerity. If you do austerity, you get voted out of office, right? That's not going to happen. The other thing is hyperinflation. You just print recklessly, like a la Venezuela. Probably not going to go there because I think like this guy was saying, Russell Napier saying like Lord Keynes said that that's like a random redistribution of wealth. If you go for hyperinflation, you just don't know until you get rid of your debt. That's what's going to happen.
And inflate the debt away for years.
Inflate it away. Now, a lot of fears are, and we didn't touch on that because I'm hesitant. I still don't know enough about the war and all that stuff. But the fear is, how is this a war? Because I think we're at war. West is at war with the East. Russia, China is at war with Europe and the US. That's what's driving the inflation too, because you have to spend money to fight all this stuff. You want to reshore, reinvest, take all of that money, all of those manufacturing jobs, that the energy infrastructure, all that stuff that the West relied on the East, that has to come back to the West. That's inflationary. You need spending, you need investment to do that. So I don't think we're going into a depression. I think we're going into like government mandated industrial policy eventually. Right now, we're not really there, but Europe is kind of getting there. Like Macron in France is kind of talking about this. Oh, we need to invest. We need to reshore. We need to be more independent. That's the kind of rhetoric that comes right before financial repression, and they start levering up and telling banks who to lend to. And that stuff works. That's the other thing. It works. That's how Japan grew so much. That's how China grew so much. They take banks and force them to lend and to invest in key areas. Now, the problem is these European politicians are so stupid, they're going to buy windmills and solar panels. That's not going to work. But maybe they can find religion and say, hey, maybe we need nuclear. We need a nuclear industrial policy. It can work. It's highly inflationary because it's just printing money and printing money and printing money, getting rid of your debt, reshoring, all of this stuff.
Just the deglobalization is what we're shifting to, and that is extremely inflationary.
Extremely inflationary.
Yeah.
Yes. That's the big picture, I think. So just waiting for markets and price action to confirm that long-term view. I always had this view. Like since I came out of college, I just looked at all this debt and I said, okay, this is inflation.
Okay, so it's not so much the Fed pivot, it's the market pivot that inflation is the greater threat than falling financial asset prices.
Yeah, and that you need to invest. And the governments are just doing all the wrong things. Like they keep borrowing and spending. There's this shifting narrative. Like, what should we focus on? Is the Fed all powerful, or is it the fact that this inflation is not going away because we're in a new Cold War with the East and we need to do all these things? I think that's what it's going to be at some point. It's not going to be the Fed, and it's not going to be that. Yeah.
Yeah.
We'll see. This can take years to play out, months just to get to the point where people say, okay, we'll still have inflation, it's not coming down. And the Fed is powerless to stop it because governments are really the ones that are holding the reins, and they don't want to stop spending. They just won't. In fact, if you see what they're trying to do about this inflation, is just spend more money.
Yeah, just every single thing they suggest to solve inflation is the wrong thing.
It's to spend more money.
Yeah. And so, eventually you think the market says, okay, asset prices aren't going down anymore because we have to hide from inflation. So therefore, we're buying stocks, we're buying bonds, we're buying financial assets. We need to play a safe haven place to save our money.
I don't think they buy bonds. I think they get out of bonds. The bonds are just force-fed into people, but I don't think people are going to willingly buy bonds because I think the story is about governments in default. It's just bankrupt governments and capital fleeing the bond markets. There's too much money in the bond market. Yeah. Way too much money. And the repo market, and these are things I don't fully understand, but it's kind of like Aave, where you just deposit your Bitcoin or your Ether and you borrow dollars against it. Guess what? The entire financial system works that way, but the only thing they use as collateral, or the main thing they use as collateral, is government debt. So if I have treasuries, I can get a bank to give me dollars, and they create those dollars. So this is an out of control. The repo market is just crazy. It's just a bunch of people with bonds creating money to buy more bonds, to create more money, completely out of control. But at the center of it is government debt. And if that goes to zero, the whole banking system goes to zero. That's what happened in 2008, by the way. You know why there was a big crisis tied to housing? Mortgage-backed securities were being used in repo. They were backing dollar loans with toxic mortgages. Well, guess what? Italian debt is just as toxic, probably more.
Yeah.
So same problem, exactly the same problem. But, and this is why I'm not in the super high deflation camp, central banks know this. They understand. They learned this in 2008. They see the problem before it happens, and they react. I mean, maybe if the UK thing had happened in 2007, we would have had a 2008 collapse because the central bank would have been, nah, We think it's going to be fine. This time, they're pretty proactive. They're told, hey, we're having margin calls. If this thing keeps dropping, everything goes to zero. Boom, the next day they're QE. They don't even care about their reputation. They just say, okay, we're going to do the top, we're going to print. And then they reverse and blah, blah, blah. So they're just, whatever. I think they're crazy. They're going to have to pivot again and again and again. I don't know what that does to their credibility, if they have any left, but it's the same problem. It's just debt, backing money, unchecked across the world. And nobody even knows where the cracks are until they show up.
Yeah, I wonder, what this is and feels like is socially, there's this epiphany / wisdom moment where people learn that government is just not your friend, bad, it's gonna hurt you. Because that's kind of what you're talking about. You're saying retail, no one's going to buy bonds. So what that will do is they will force legislation to make people buy bonds, and that
institutions, right?
Institutions force institutions to buy the bonds with the individual's money, and then people are going to see their retirements disappear and their savings disappear, and then it'll be this big. It's kind of like the fourth turning type stuff. There's this big moment where this generation figures out, it's like, oh, government's just evil. You can't have a big government. You need a small government. Because that's why it's like that fourth turning concept is everything's headed in this one direction, like off a cliff at 100 miles an hour. But then there's this learning moment as a society and the pendulum swings and then it goes the other direction for the next 80 years. I hope so, because this big government is just destroying the world.
I mean, I was going to mention, when you mentioned Cuba and all that stuff, I lived in Argentina. I lived through this. Black market is huge there. And I was talking to my girlfriend earlier, and I realized the reason Argentina works so well, even though if you look at Argentina's numbers, like inflation, interest rate, you look at all this stuff and you might think, okay, this thing is collapsing. No, it's been like this for many years. So I'm pretty sure, I haven't been there in many years, but if I go there, everything's going to be fine. Why? Nobody trusts the government. So people don't have their savings at financial institutions. People do not, the whole economy is like a huge black market. So it works just fine. Even though there's high inflation, it works because nobody has their money in the bank. Nobody trusts the government. That lack of trust in government makes it so that when government fucks things up, it doesn't matter. It just keeps working because nobody trusted it. Now there's downsides to that, right? Because nobody trusts anybody in those places. You can't trust government. You can't trust your own neighbor. Nobody trusts anything. It's a stable situation. It's very chaotic, but it's once you know the rules, you realize it actually works. My dad was like working with these like Argentinian construction companies, huge companies, and they love inflation because they're always like they have to adjust salaries. Everything is indexed to inflation in these places. But it's always below inflation. If inflation is 100%, then you're going to have to pay them 70% more, right? You're making money in dollars. That money's offshore. You don't even tell the government how much money you're getting. So they love it. They're making all this money in dollars. They pay back in shitty pesos that nobody wants. And it's just going to keep doing this. Now, again, you're not going to hear anybody confess to this. You're not going to see it in the macroeconomic data. But once you're there, you realize, oh, it actually works. There's no faith in government and it works. I think, that, like you said, I think the West is headed there. I don't think it's necessarily a good thing, but these guys are a bunch of crooks, especially in Europe. Like they don't deserve people's trust anyways. We need a new set of leaders. So for now, I think loss of faith in government is a great thing. But loss of faith in government means government assets and paper goes to zero. Let me give you another example. Nigeria recently went with a CBDC. I just saw it on Twitter. It was fascinating. They launched a CBDC in Nigeria. I've never been to Africa, but I hear that people have as little faith in government as we do in Latin America. Complete failure. Nobody wants that stupid CBDC. It's called an e-Naira, I think it's called. Nobody was using it. Like only one in every 200 people was using the e-Naira. Nigeria is one of the countries with highest crypto adoption. People get it. People get it. It's not the same. I mean, Argentina, I don't have to, if I say CBDC created by the government, Bitcoin is not created or owned by anybody, people they get it, number one. Number two, they'll use crypto. They're not going to use government money. I think there's places, I worry about Europe, because maybe people won't see the difference between the euro and Bitcoin. But in places where I grew up, they know the difference. They know it pretty well.
That's very, very good to know. Very heartening. Yeah, I remember seeing that the fastest adoption pace, I think, is Vietnam for Bitcoin is Vietnam 1 and Nigeria 2. And it's the same thing. It's just they've learned you cannot trust government. Now we can just teach our Western friends to figure this shit out.
It needs inflation, because without inflation, this has always been an inflation these days. Like, they're printing all this money. If there's no inflation, there's no cost to this policy. What's the cost of this policy? There's no direct cost. And I think it led to massive rise in inequality. Very hard to point the finger at the central bank for that. So it has to be inflation, because otherwise there's no cost to you as a politician. You just keep printing. If you have inflation, you cannot justify all this printing. But, and this is where we're transitioning to, once you get to that inflation, you can't stop it. Now we're at the point where people say, oh no, we can stop it. Oh, the central bank can't stop it. No, they can't, because stopping it means breaking the bond markets. So that's not going to happen. And so they're not going to go there. And that's when I think maybe people lose faith. I don't know. I'm not going to make the bet that people lose faith in the next cycle. I think it's going to be many, many cycles. Some people say that we're there. Marty Armstrong, I don't know if you know him. He says that, no, this is it. This is the final wave. He calls it a private wave, where money leaves public assets, in other words, government. Money leaves government and it goes into private assets. So anything that's not government, that's what goes up. Anything that is related to government, that goes down. To his credit, he has been talking about this for a while. He said that as we head into 2032, I think he said, that's what, like, the last few years before you get to 2032, because that's the peak of the cycle. He's a cycles guy too. That's when you're going to see this exodus from government money into private, what he calls private assets, and that includes real estate, stocks, gold, crypto, anything that's not government.
What was the timing of it?
He says he always talks like this. The peak of that private wave is 2032. So 2032 is when there's gonna be some type of reform or something, and faith in government is restored. What he's saying that is that in this cycle, and I think this cycle started like decades ago, people are slowly losing faith in government. And that reaches some type of peak in 2032, and then you go into what he calls a public wave. So new system, reforms, whatever, and then people trust returns to government. Because honestly, you kind of need to be able to trust the government, because society it doesn't function very well if there's no faith in government. At the same time, the government cannot be too corrupt. So that's kind of like, I don't know, it's like two sides to the same coin. You need a new government, but you need people there who you can trust. Right now, you're just not seeing that. You're just seeing mismanagement after mismanagement, just fuck up after fuck up. Whole energy policy in Europe is insane to me. It's just crazy.
It is. It's embarrassing. I mean, and America's, you talked about it effectively, the social credit score, and governments will be, yes, hey, banks lend to these companies and not those companies. That's just the ESG model, which they're rolling out all over the world.
Dude, there's a Twitter thread I meant to share it with you, but I think I lost it. Maybe I'll find it later. This the whole greening of finance, they're talking about greening finance and using like climate scores and whatever. And really what that means is that we're going to give money to people that are politically favored. People with whom we agree politically, those are going to get plenty of credit. The other guys are not going to get anything.
Yep.
It's horrible. That's not capitalism. But then Europe is not capitalist place. It's semi-communist. It's not capitalism. And to his credit, like Jay Powell was like, nope, that's not part of our mandate.
Yeah.
To his credit, he's too tall. He's like, no, we don't really do that. And the other guys were like, oh, could you? It's
good
funny.
stuff. Good stuff.
Yeah.
All right, Juan, thank you so much, buddy. I'm looking forward to this. Is it already on the calendar for next month?
It's December, right?
Yeah.
It probably should be. Yeah. I know it's the first week, so.
You got some what?
No, I know we do it on the first week of the month, so.
Is it okay? Oh yeah, no, that's perfect. Yeah, that's perfect. Okay, cool.
I mean, we can always move it. I was super.
No. That's great. You know what? I actually have 3 regulars per month. And this month, it's not always exactly 4 weeks. This month, they all fell on the exact same week. And I was like, I just wanted to stretch it around a bit. But next month is already going to be a different date, so it's fine. So cool. Yeah, all right. If it works for you, buddy, look forward to next month. I love our chats. They're my favorite.
Amazing. See you, man.
See you, buddy. Bye. Now, if you want to see the original video with Juan, I highly recommend you go ahead and click this link right here, because in that video, he shares his top secret formula for his timing method to know when the bottoms will be in markets, and he actually reveals whether or not that signal has been triggered or not yet. So go ahead and click this video now.